fun. All right. Welcome everybody to today's little webinar. This is actually live on YouTube, but we're recording it so people can watch it later on. So the whole theory of trading comes down to buyers and sellers, right? The market is moving based on buyers and sellers. What does a candlestick illustrate? The candlestick illustrates the emotion, right? The market has an emotion. Because why? Because humans are interacting with the market. There's a reason that we get these pops, these drops, and these erratic movements. It's not because the market has some magical algorithm that's trying to murder traders and retail traders. It's simply because of people, right? People are placing their stop losses. People are buying. People are selling based on different indicators. There's a reason that indicators like the volume weighted average price, the VWAP, right? The VWAP is probably my end all be all indicator when it comes to something that I feel is reliable in the sense of being able to take trades based on the VWAP, being able to see where the price action is going with the VWAP. So I really want everybody today to kind of understand why I believe the VWAP is such a powerful indicator. And if I was going to use one indicator in general, I would focus on the VWAP. So let's pull up the VWAP. Right now, we're looking at the 2-minute chart. And I've already talked about this a ton, but I want to break it down again. The 2-minute chart is obviously, between the 1-minute chart, between the 3-minute chart, right? 1 plus, 1, 3, 2. Simple, right? You understand? That's why I think, personally, if I look here, if I go to the 1-minute chart, you definitely get some choppy kind of fake outs. You get a lot more just kind of noise. The 1-minute chart can get very noisy. If you go to the 3-minute chart, yes, it's a little bit cleaner, but I think now you're kind of missing out on some opportunities for entries and vice versa. So for like example, looking here at the 3-minute chart, I don't even know what this is actually going to look like on the 2-minute chart, but the 3-minute chart here, we've got this kind of high on that 3-minute candle there at the 235s. Right? So as a momentum day trader, I'm looking to enter a trade when we show momentum to either the upside or the downside. I really don't have a bias. I'm not really trying to short or buy at certain levels based on, support and resistance. I'm simply trading the overall momentum in the market. So like this setup right here, we pull back, we start to consolidate, and then we make that next leg up. So my entry here on the 3-minute chart would be basically once we break the high of a previous candle, right? So we've got this 235 high, 235.50, and then 235 right there. So 235 basically has to break for me to enter the trade. Once we make a new high through the previous candles, especially on this type of setup, this 1, 2, 3, bang, 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 that's my signal to get long. So I basically get long once we break above that 235 level, that previous candle high. So 235 being the previous candle high, and then we get that breakout. So let's look at the 2-minute chart. Did the 2-minute chart give us a similar entry or a better entry? Now, this would be the idea here, right? You can see on the 2-minute chart, we got this basically 233 level was the high of that candle. So yes, you could have entered maybe a little earlier on that trade. It doesn't always work out perfectly, but you see on the 2-minute chart how basically the high on that candle is 233.75. So that would have gotten you into the trade here. If you're trying to get long, that would have gotten you into the trade there at 234. Not today. The market's obviously very slow being closed. And then if you go to the 1-minute chart, you can see how on the 1-minute chart, just not as sexy, right? It's just not as clean. It's not as clean of a breakout there. You would have gotten in there 233.75 anyway. That little dip, might have stopped you out. But in general, 234, 235 kind of being your entry there on that momentum. So you can see the 1-minute chart difference, the 2-minute chart difference there, and then the 3-minute chart. 3-minute chart, a little cleaner. I do like a couple things about this setup as well. Like I love to see when liquidity, right? When is the liquidity run, or is there a little trap? Is there a trap? Is there something that's kind of initiating kind of a reversal? Is there something going on down there? I always want to kind of ask myself, am I getting trapped? Like if you don't know if you're getting trapped, there's probably a good chance that you are getting trapped. Like you got to spot the trap and then you got to get the move, right? And that's what we're looking for here. We're looking for traps. We're looking for opportunities for that momentum to shift. the overall idea of the market is very simple. The market moves in waves, right? It moves in waves. That's what the market moves like. Basically in channels, in waves, it goes up, it pulls back, it goes up, it pulls back. Now, obviously, when we're bearish, it's putting in, lower highs, and lower lows. So that's kind of a bearish move down, kind of in that channel, moving like that. Now, obviously, the move to the upside is putting in higher highs, higher lows. So higher lows, higher highs, and that's a bullish move. These pullbacks here are not bearish. These pullbacks are basically, just a overall bullish pullback. One thing that I kind of love to think about when I'm looking at the charts is if I'm looking at the charts, I'm thinking, okay, the market only has so many patterns, right? There's an idea, the fractional, you can trade the fractionals, the market basically moves a certain way only so many times. Like that's just how the market moves. People kind of see these patterns repeating over and over. So I know that if we pull back kind of into this level here, where would be kind of the next push up? If we're going to push up here, well, we'd probably push to there and kind of hit that target of that previous high there, because we know that, again, the market moves in waves. So if we pull back here and we start to push up, well, where would a bullish, move be? Well, it would be to there. It would pull back to there. It would pull back to there, right? This previous highs turning into a resistance or support really is what we're looking for on these bullish moves or bearish moves. So again, I just drew you a little chart. It's not always perfect, but you can see, what are we doing? What are we doing? What are we doing? You can see here, that was a previous resistance there turning into support. Previous resistance here, a little bit of support, a little fake out. Now the idea is this level, you'd want to see this kind of pull back and then that next push up. So it's almost like when I'm entering a trade, I want to kind of picture what that wave would look like, right? Am I entering at the top of the wave? If I see a chart and I'm looking at it like this, and I see that we just pushed up, like, am I entering at the top of a wave before that next pullback? Do I really want to be entering, on the pullbacks there? So the candlesticks are telling stories. They're always telling stories, and the candlesticks are showing us the emotion in the market. Now, if I look at the hourly chart, what's the big difference with the hourly chart? Guess what? It's exactly like the smaller time frames. The market is, moving in those waves. You can see here, we pushed up, we had that resistance there, that turned into support, we got the breakout. Anytime that resistance turns into support, it's a very bullish, thing, indicator or idea, because the market is pulling back into a previous level where it couldn't get through, where there was resistance, and now it's turning it into support. So we know that, number one, the bulls took out that resistance, they pushed up, they pulled back, they bounced, they bought the dip off of the previous area of resistance, and now we're getting that push up. So I have the small time frames always pulled up, but then I have the hourly chart always pulled up, because I want to look at this as well. If I'm looking at these hourly candles, are we at the top of the hourly candle? Are we at the bottom of the hourly candle? Are we selling down? What is that hourly candle telling me? Well, right now, the hourly candle is telling me that we're starting to push above these previous hourly candles. Again, today is not a good day for trading. It's a holiday. We're not here to trade. We're here to just look. But you can see the wave, right? It's there. It's always there. It's always happening. It's always there. So just be aware of that. If you think that there's not going to be a pullback, well, guess what? There's going to be a pullback. There's always going to be another pullback. There's always going to be a better setup to come. There's always going to be opportunities. If you miss out on a move, that's totally fine. You can miss out on a move because as a trader, that there's going to be a pullback. There's going to be more opportunities. There's going to be more opportunities, right? There's always going to be more opportunities. So looking here at the hourly chart, this is Monday's big move. You can see that big tail, that big wick there on that hourly candle. We pushed up there above this level. We break out. We saw that we were pulling back. I saw a lot of bearish people there on Monday. And look what happened. We go straight up there on Monday. I wish TradingView had this setup just a little bit easier. But look at how once we start to push, look, would you just look at it? The wave, right? The wave. Roo, roo. I mean, it's not always perfect, but the pullbacks are there. Even when the market's going straight up, there are pullback opportunities. Always pullback opportunities to get long for that next move. So as you can see here, we turn basically this previous area of resistance there on Monday. We pushed up, we got stuck, we get the breakout, we start to pull back. We turn it into support before we make that next wave higher. And as you can see, basically the market is always kind of pushing and then consolidating, pushing and then consolidating. Different time frames, different setups, but in general, the 2-minute chart here, you can see kind of pushed up, pulls back, kind of chops around for a minute, and then finally makes that next move up. But again, what do we have here, right? We can see that the sellers here are getting defeated. Because why? Because we put in kind of this higher low there. I would say this is almost like an inverse head and shoulders type move for that push up. We dipped down, basically retesting this area of resistance, pushing back up, and then getting that move up. So kind of an inverse shoulders type setup. For this type of breakout, like where do I really want to enter on this setup? I would say you got 2 ways to enter. You can enter kind of this pullback, the breakout there. The problem is like these little pullbacks, you really want to be careful. If I'm buying a breakout for like a bull flag or something like that, I really want to see a retest kind of as close as possible to that previous area of resistance before entering the trade. And if you're entering this trade, like kind of, where's your stop loss at? Well, your stop loss really is kind of like that previous area of resistance wanting to be support there. And sometimes you might get a bull flag and you just don't have a very good stop loss setup, right? It's just like here, not the best. I don't love the risk to reward in terms of a stop loss there. If we look earlier in the day, like this type of consolidation for the breakout, where is my stop loss at? I really want to keep my stop as tight as possible, always. So when I'm entering a trade, I would say like this one might be just not like the cleanest, but if I'm entering this trade for like, I'm thinking this is going to reverse, we kind of trapped to the downside there. Well, there's our little trap and there's our push up. So if I'm getting long for this breakout, let's say I'm getting long above the 70s, my stop is basically risking, below that 60 level. I don't want this back below 60s because if we push up there, well, there's a good chance that we start to move down and start to make that move down. So I really want to see kind of good, safe entries. And, the big thing for me too that I've learned is with the NASDAQ, 10 points with the NASDAQ when you're entering momentum type of setups, pretty realistic. Like I can be pretty realistic about the idea that the market's going to move, 10 points to the upside and give me at least 10 points. If I take 10 points, it's all I really need, baby. I just need 10 points a day. Keeps the doctor away. It's getting hot in here right now, actually. Oh, man. So if you see here, another perfect example, we have the high on that candle right there, 94. 20,004 was the high on that candle. So my entry is basically above the high of that candle, being the 94.25. So I get long there at the 04s. It pushes up there to the 18s. I get my 10 points. It starts to consolidate and then makes another big break to the upside. So I love these little kind of breakout setups. Again, kind of like here, what do? We put in this move, we're kind of moving down. We had this little bullish type of kind of setup back to the upside and kind of pushed, even above the 109s. We went 10 points to the upside. From this setup here, you can see with these candles, again, the high 19, the high there, 15, the high there, 13, the high there, 11. So once you break back above 1150, well, there's our entry. And you can see from the 1150s, we're targeting the previous high. So from the 11s up there into the 20s, it goes all the way up there to the 50s. Where's my stop at? If I'm getting long here at the 12s, my stop is basically kind of below the low of this candle, right? The risk reward here is, like I said, looking for 10 points to the upside, and I'm kind of risking 10 points. The nice thing is, the more and more of these setups that you enter with the idea of taking 10 points, you're going to get those trades where you're going to enter. You're going to enter here at the 11, and then it's going to show a lot of strength, and you're going to get 15 points. You're going to get 20 points. You're going to get 30 points. So it's very much I like to aim for the lower side, right? Instead of being like, oh, I want 40 points per trade, I want to enter the trade with the idea that I can get 10 points. Like if I can get 10 points and there's a lot of momentum here, like if I enter this trade at the 11s and it starts to push and it's showing a lot of strength and I see the market showing momentum, well, then I can hold for 20 points. I can hold for 30 points. I can hold for 40 points if I see there's a setup there. But at least I'm entering a trade with a very realistic plan of being like, hey, if I get my 10 points, I'm totally fine with that. So it takes away a lot of the greed. It takes away a lot of the emotion, the FOMO. If I can just be okay, right? I'm okay with entering a trade, taking 10 points. If I get more, oh well, great. It's a win-win. If I take profit at 20 points and it goes higher, again, it's like confirmation that number one, you're seeing momentum the right way. You're seeing these setups, and that's what we're looking for. It's confirmation. Just because you enter a trade and you take profit for 20 points and it goes up 50 points, it doesn't mean you're a bad trader. That's like confirmation, right? It's like, hey, Patrick, you entered a trade. It went directly to your target. You took profit, and then you're looking for the next setup. You literally entered the trade and then you got rewarded. Too many people create bad emotions around taking profit early. People really do. People get so caught up on the fact that they took profit early. I mean, I've done that. I've been there. I've had that issue so many times. So being able to be okay going into a trade, be like, hey, if I get this breakout here, if we break out here, I'm pretty confident that we're going to get 10 points. If we get more, that's great. I'm totally fine with that. If we go up more, I'll take 20 points. If it keeps going, hey, there's another setup to come. There's always more setups to come. So as we look at these candlesticks, what are the candlesticks telling us? Number one, there's no reason, again, going back to here, there's no reason for me to get long here. Until what? Right? If I'm looking at this setup and I'm like, okay, I want to buy this pullback. Well, I don't need to buy here. I don't need to buy here. I don't need to buy here. I don't need to buy any of this, right? There's just no reason, because I know that if the market's bullish and we're going to push higher, what's going to happen? What has to happen for the market to go higher? Well, one of these candlesticks has to break the previous candlestick high, right? Yes, you're probably looking at this and going, well, what about this setup? Again, I want to point out something here. Look at this setup, right? Look at this setup there. It's different, right? There's something different about this setup. As you can see, there's just something different, right? Because I draw my line there and the line is pointing up, right? It's pointing up there. It's kind of weird, right? It's kind of I know it's weird to think about, but if you draw your line here on this chart, that's not really a bull flag, right? It's just not. That's not a bull flag. This more so is telling me that there's a good chance if we break this low of this candle, we pull back. So a couple things didn't happen for this breakout. This candle make a new high right here. One thing didn't happen. We didn't really pull back and retest previous resistance. And then we also really just don't have a clean pullback. So what I really want to see when I'm looking for a breakout for these candles is I want to see this. All right? Looks a lot better. It looks a lot better when you think about it. Putting my line like this compared to this, all right? It's just, it's totally different. The angles are different. I want to see this breakout to the upside. I want to see the market basically push up, and then push to the upside. Because, why do I say that? Patrick, what does it matter about the angle? If it's popping to the upside, why do you care? Well, let me show you why. Let me show you why here. I need to find a little kind of bear flag set up here. Here's a good example, right? This would be a kind of bearish little pullback scalp setup there. These candles are getting like kind of following this this bear flag, right? They're kind of following that bear flag back up and then getting that pullback. And then you see how like now we're breaking out to the upside. So people always think that when the market's going up, it's bullish. When the market's going down, it's bearish. But it's actually the exact opposite, right? Because we know the market's moving in the wave and there's a good chance that we do one of these, a trap to the downside and then make that move. We always got to be trapping. There's always got to be some type of little liquidity trap. That's because of stop losses. That's because of, people looking to short at a bad spot. You ever wonder why when you enter a trade, you enter a trade and all of a sudden the market goes exactly the opposite of what you thought it would do? Well, it's because it's giving you these little ideas that, like here, this is a good example. Look, we just broke this level. Well, that means we're going to sell down, right? Like we went up here, we went here, and now we're here. So, well, I should get short, right? Like this should be my area to get short, Patrick. Why am I not getting short here? Look at this candle, it's selling down. Well, look out a little bigger, my friends. Guess what do we got? What do we got? We got our little wave, man. This thing is real. It's like surfing waves, man. You don't want to be entering the short at the bottom of the wave. You just don't want to do it. And again, that all just goes back to your simple trend line analysis. Or just putting your trend line, break line, whatever you want to call it, right? I put my little break line there, bam, to the upside, 10 points. I'm trying to find some bearish price action here. Market's just been going higher and higher for lots of time now. So let me see. A lot of consolidation. Where's a bear setup here? Thursday. All right, perfect example here, right? Market pushes up here, bear flags, and then makes a new low. I gotta feel, why is TradingView is such a pain in the ass when you change time frames on different times? I think we traded this as well on Thursday. June 13th. Last week we were trading this setup. And look at this, right? We had a bearish breakdown to the downside there. We start to what? We start to bear flag back up. And people are going to tell you, oh, Patrick, why are you not going to get long here? Like, we're putting in higher lows. We're putting in higher lows. Yeah. Guess what? What does a bear flag do? It puts in those higher lows, and then it makes the new low. But again, what do we like? We're not really reversing, right? We're in really still there's a lot of resistance here. I'm not getting short or I'm not getting long on this setup here. There's no reason for me to get long until we basically get back through this previous area of support that we broke through that's now turning into resistance. Does that make sense? As we see, bear flags go up, bull flags go down. I know it's crazy. Everybody is very confused about that sometimes. I see a lot of people talking about different trading stuff, and it's like, wait, what'd you say? What'd you say? This is like an overnight move here. I never really trade the overnights because it's a kind of low volume. I don't trust the price action the same. You get, just less volume, less consistency. You get more trappy action sometimes, or you get those just very annoyingly grindy action days as well. I mean, to be honest, the market has been absolutely just kind of grindy and choppy for what I feel like has been a long time now. I don't know how you guys feel about it, but ooh, look at that. Big got the 930 little boner candle there. And again, look at how that setup was there. If we go here, you can see the idea of kind of pulling back and then getting a push there. So right now this candle, you got 20 seconds here. You can see wick. We basically pushed up into this area. We got stuck. If this candle closes down in here, kind of expecting more chop. One thing that I talked about the other day, yesterday, was kind of this idea, right? The VWAP. One thing that I'm not a big fan of, I'm not a big fan of basically just buying because we're at the VWAP, right? If we see here, okay, we sold off the VWAP, the little blue line is down there. Okay, that's fine. But how do I know it's going to bounce off the VWAP? I don't know. I really don't know, to be honest. Like, it's just not guaranteed. You know, there's no guarantee that this thing's going to for sure bounce off the VWAP. So, you know, I really want to start to see, you know, some bullish price action, if that makes sense. I want to see a reason for me to get long there. And sometimes I would say if you're having too much choppy action on the small time frames, there's important. Zoom out, go to the 5 minute, go to the 10 minute, go to the 15 minute, go to the hourly. So as you can see here on the 5 minute chart, these candles having a hard time breaking through there, right? So how can we avoid getting chopped up here? Well, we want to see a convincing close there on the 5 minute chart, the larger time frames. If we go and look at the smaller time frames, yes, we did break above these previous candle highs here, but again, you know, pulling up the 5 minute chart next to the 2 minute chart, I can see that the 5 minute chart's having trouble getting above those previous candle highs. So that's like, I don't want to get long when that 5 minute chart's looking weak. You can't get through there. So I can basically look at the 5 minute chart there. Oh my gosh, why is it so annoying? Why do you, if you change a time frame, why does it always move it? 5 minute chart. If I'm looking at the 5 minute chart, I'm looking at the smaller time frames, I can see there's resistance there, 228, 228, 228.50. We break through the 228s, and guess what? We break out, we turn it into resistance there. We turn it into support there at the 228s. Going back to the 2 minute chart. What do we got on the 2 minute chart? Well, we can see that there's those candle highs, those 5 minute candle highs. We see those. Now we can identify that and we can ask ourselves like, well, there's no reason for me to get long here on the 2 minute chart because I'm looking for that 5 minute breakout. The 5 minute chart needs to break out before I get long on this 2 minute setup. And as you can see, well, the first kind of 2 minute candle to get through that 228 level, 228 pushes up to the 31s, actually pulls back, tested it, and then made that push up. I hate looking at this overnight price action. And I also don't love looking at the daily price action either. It's all bad. And as you can see right now, the kind of, I don't even call it a market open, but the holiday open, wick. No reason to get long here until, you know, we show some strength. Again, today is just not the day to be trading. Today is the day to take a break or focus on your craft. And yeah, 15 minute chart is definitely kind of like one of my go-tos. If I'm looking at the 15 minute chart and the 15 minute chart looks like we're chopping, we're not really making a move, well, I want to be careful of that as well. So like, I don't want to be buying breakouts when we're sitting there, you know, chopping on the 15 minute chart. If I look here on the 15 minute chart, I can see, you know, trouble. We finally get the breakout. And now we got the 2 minute chart and it's going to be all screwed up again. Oh God. So you can see the 15 minute chart, how we did get the breakout there on the 2 minute chart and then kind of chopped around, got back above the VWAP there. So my long entry here would have really been back above the VWAP. This is, again, kind of overnight crappy action, but the VWAP, my number one indicator. We love it. We use it. If you guys are never using the VWAP, I don't change the settings there on the VWAP. I pretty much leave it just like that. So you all can see. Those are my VWAP settings. VWAP settings. All right. My next and favorite indicator that people always ask about is the pivot points. So these are the pivot points. When you go on Trading View, you type in pivot points standard. Right there, it'll pop up. Pivot points standard. I use it very simple. I don't really change anything. I just leave it how it is. And that's my pivot point settings. All right, everyone sees that. Nothing fancy. This is a free indicator, by the way. Free indicator there on the TradingView platform. So there's your pivot points. Now, let's look. Let's look at these pivot points, baby. Pivot points love to get touched. Now, you have to understand a couple things. If the market has a lot of range the day before, if the market makes a big move the day before, the pivot points for the following day will be much wider. If the market has a tight range, then the pivot points will be much tighter. The pivot points are based on previous day price action. The previous day price action mathematically equated into these levels. And, well, I don't know why. I really don't know exactly why, but for some reason, the market loves these pivot points. The market loves these pivot points. I think it's literally just a mathematical equation. Pivot points in trading. Pivot points are a technical analysis tool that traders use to identify important price levels in financial markets. They are calculated using the previous day's high, low, and closing prices and are used to predict support and resistance. It's literally just an equation. So it's basically the high, the low, plus the close divided by 3 is how it goes. So you have like these, it's basically just a mathematical equation. So it's the pivot point itself is simply the average of the intraday high and low and the closing price from the previous trading day. I've been using pivot points now for what I feel like about a year, 2 years, and I'm telling you, I don't know exactly why, but they work. They work as resistance, they work as support, and it's a great momentum indicator, right? A great momentum indicator. You can see back there on Monday, the VWAP turning into support. Where do we push to? Right up there to that pivot point. Is it a coincidence? Like, is it just magic? Did the market just magically move to that level and then get stuck there? That's a little interesting, right? Like, how did that happen? How did it just magically do it? And then guess what? From this pivot point at the 20,014, where did it go? To the next pivot. Why? Why did it do that? I don't know. Does anybody know? It's math, man. The math is real. The data, man. And what's funny is, remember, we're at all-time highs, right? We're at all-time highs. There's no resistance up here. There's nothing stopping us from going higher, except for these pivot points acting as support resistance. The market moving to these levels. That 15-minute candle right there, 208. The market's never been that level before. The market's never seen that level before. Not in its entire history. The market has never been to 20,208. Is it a coincidence that we moved up there and hit that level? Got stuck and then pushed through it? I don't think so. I personally don't think so, but I might be wrong. But you can see pivot point. We're up here at a level with no resistance, no previous price action, and somehow the market is still kind of finding those pivot points. You know? So, Again, here's the move down. The one thing that I do want to make very clear about indicators is people will front run, basically, right? It's called front running in the sense of people get FOMO. It gets close to a level, people start buying, and it kind of creates a artificial support. It creates like this artificial level where the market might bounce before it hits the pivot point, like right on the dot. Like it's not always perfect, but we know that if the market pushes off that pivot point, there's a very good chance that we kind of retest the level, that we start to look for opportunity, and it's something to always keep in mind, right? I'm looking at those pivot points, and I'm looking for setups, and I'm looking for moves always. I love, I think the best setup that you can get is when you have three or four indicators or three or four reasons to get long off a level or to look for a setup based on, that indicator. Like here, we push up there. This is the 15-minute range breakout, opening range breakout there. We push up above that level. We break out. We turn it into support. Then we kind of pull back here. Again, we've got a couple things going on at this level, right? We've got the pivot point there. We've got the VWAP there. Yeah, there's no, if you're trying to get short down here, you doing it wrong. You're doing it real wrong. Don't go doing that. Shorting at the bottom and buying at the top that's not how you make money. But a lot of people try to do it. A lot of people try to do it. All right, yeah, they try. I see somebody asking about the dollar. I wasn't going to answer questions, but now that it's kind of relevant. The dollar, same thing. DXY. You go on TradingView, type in DXY on TradingView there. Dollar Currency Index, the one that I use here. DXY. What I want to see when it comes to the dollar is a couple things, right? If I'm looking to get short, I want to see the market, obviously looking bearish, but I want to see the dollar selling off, right? I don't want to be getting short when the dollar's selling off on the NASDAQ. Why is that? Because purchasing power, right? The dollar has purchasing power. A strong dollar creates weak stocks and vice versa. There's, I'm not a fucking macroeconomist, but something to think about. So, what are we doing right now? Let's look at the price action currently. And then look at the dollar. Dollar. Probably going to be choppy with the holiday, but yeah, the dollar is kind of trending up here, starting to push up. We kind of held the lows there. Got that pivot point to the upside. You can see the dollar's like in that channel right now. So the dollar got stuck there at the 105.24 right there at 9:30. Started pulling back, and look what the NASDAQ did there at 9:30. It popped up. So the NASDAQ broke up. The dollar started pulling back inside that channel. So I basically just want to see a bearish dollar, and I want to see a bullish NASDAQ. I want to see a bullish dollar. I want to see a bearish NASDAQ. It's basically inverse. It's an inverse, right? That's really what it is. It's an inverse. All right. So just let's stay focused here on what we got. So again, we got pivot points. We got our VWAP. And I think the pivot points and the VWAP really are all you need at the end of the day. If you're looking for the end-all, be-all package of indicators, we know the VWAP is very powerful. I've been to the New York Stock Exchange. I've been on the floor at the New York Stock Exchange. I've talked to real brokers who are trading based on the VWAP. They use an algorithm where they only buy a stock when it's close to the VWAP, volume weighted average price. The volume weighted average price is your most realistic value of that stock that day based on the volume and the average price. So these big funds, let's say they want to buy 1 million shares of Apple. Well, they're not going to just go put an order, buy 1 million shares of Apple just because. They're not going to just buy market order. they're going to use an algorithm to slowly get into that position every time the market gets close to the VWAP. If they're looking to get long, they're going to try to buy when the market is at a good value, a volume weighted average price, right? Volume weighted average price. It's giving you kind of your best bang for your buck when it comes to buying there at the VWAP. Guys, asking questions in the chat right now. Give me a little bit longer. I'll answer all your questions. Don't worry. The more that you retype it, I'm going to start banning people. So if you type the same question 20 times, you are for sure getting banned. So let's not do that today. And it doesn't make me want to answer your question anymore when you ask it 20 times. It actually makes me not want to answer it. So you're not helping yourself. Right now, you can see, what do we got? NASDAQ building this wave out right now. Starting to move down. It's not like the best, but this little candle right here, where would I say this is going to go next? Looking at the dollar, you can see the dollar is kind of at the bottom of that channel right now. If the dollar can kind of push up through this, well, then I'd be looking for the NASDAQ to sell down, but dollar kind of looking like it might want to move down here a little bit lower. NASDAQ kind of pushed up here a little bit more. Again, definitely not the day to be trading. Low volume, holiday trading is not when you want to be trading. If you want to trade when the market's open. Trade when the market is open. Don't trade when the market is not open. Don't be that guy. All right, the last indicator that I have on the chart here, people always ask me about. This is the price action concepts indicator. One of the things I like about it, it's not about being ICT, it's not about any of that. I really like it for a couple reasons. Because it gives me some information on like price structure. You get these areas basically where we don't retest. We get this like straight up pop. Well, guess what? We kind of had to pull back and retest. I mean, you don't even need the indicator to see that. But, when the market kind of pushes up, well, there's a very good chance we kind of, again, make our little wave and then pull back, break out. So, it really comes down to your own personal preference. I kind of like this indicator. This is the price action concepts. You can see this 15-minute candle there at 9:30 actually dropped right back into that 237 level, which was right in the middle of this kind of candle, this breakout candle. So retested that and then pushed up. It works. I'm definitely not the person to sit here and tell you that you have to have any type of indicator on your chart. I think the VWAP, I think the pivot points are totally fine for most trading that you need to do. So I don't have the perfect answer of what indicators are the best. At the end of the day, I've been trading for 7 years now, and I've tried every indicator there is. There is no replacement for just understanding price action. Understanding one simple idea. The market moves in waves. Right? That's the only argument. That's the only argument that you can ever make in trading. The most factual, most real argument that you could ever make trading is that the market moves in waves. And that every other idea, every other theory is just built on the market moving in waves. Right? Like, if you think about that, it's literally every indicator, every setup, everything in the entire trading industry is based off of one simple idea, that the market moves in waves. So if the market's going to move in a wave, well, we need to make sure that we're entering at the right time, because I don't want to enter at the top of the wave. I want to enter at the bottom of the wave when it starts curling up. When it starts curling up, right? That gives me a pretty good risk to reward, gives me an overall idea that we pulled back already. If I buy right here, well, it doesn't mean that I'm wrong. It doesn't mean the market's, going to crash down. But do I really want to hold through this drawdown? Because I already know, like, hey, whoa, like, if you understand this theory, it helps you really avoid FOMO. It helps you really avoid doing stupid shit. When I first started trading, it wasn't that I was a bad trader. It's just that I focus so much on trying to just get into a trade because I thought it was a good trade, but not realizing that, hey, the market moves in waves. So why would I just try to enter after we basically went the bottom of the wave? We're peaking up, we're curling. Oh, Patrick, do I want to get long right here at the top of that? Like, I mean, obviously I don't know the market's going to pull back there, but like, do I want to get long right there? Probably not. Because I know that, again, the market moves in waves. And then here, the great thing about this strategy as well, this theory, if the market's not moving in a wave, it's probably choppy and it's probably you want to stay out of it. Another little tidbit of information. You probably want to stay out of it. If the market's not giving you and showing you that there's waves, it's not happening, well, it's probably just stuck in a range. And would you look at that? The NASDAQ pulling back here. We got the VWAP there at the 232s. We talked about the dollar here. The dollar at the bottom of that channel starting to push back up. Is it a coincidence that the dollar is now like looking like it wants to try to push off the bottom of that channel? So if I can see that the dollar's in a channel and the dollar's moving in a wave, what's the probably like the next plausible idea here? What's the next plausible idea? Well, there's a very plausible idea the dollar is going to bounce off the bottom of this wave, off the bottom of that channel, and start to push back up. And then guess what? Now the NASDAQ would start to move down. So it's plausible. The waves, man. And the best part is, this is how you know the waves are real. This is how you know, right? How do we know? What time frame is this? What time frame is this? Anybody? This is the time frame. You look at it, you're like, is this a 1 minute chart? Is it a 2 minute chart? The 5 minute chart is the daily. And what does the market do daily? What does it do daily? It moves in waves, even on the daily. This is like, it's not like nobody in the whole entire world of trading can deny that the market moves in waves. So the more that you understand that, the more that you believe it, the more that you own it, the more that you really tell yourself like, hey, my best opportunity here is to wait for the bottom of the wave to set up and then enter a trade, right? That's really what I'm looking for. I need to understand that. I need to believe it. Because if I believe it, if I love that idea, if I know that is a fact, if I know the market moves in waves, well, I can go down to a smaller time frame and I can find an entry. And I can tell myself like, well, there's no reason for me to enter a trade until what happens? Until we start curling up, like we said. Now the market is all crazy. Until we start curling up and we start to make a move. Perfect example. Here you go. All right. So it's like, Patrick, do I want to get long right here? We got a little bit of resistance right there. Probably not. Probably not. Again, draw my little wave. Oh, yeah, doesn't look good. Now you can sit here like, well, how do you know it's not going to just keep going like that? Well, you never know. You never know. But again, like what's your rush? What are you worried about? Are you worried that the market's never going to pull back? Are you worried the market's never going to make another wave, another retracement? Like, is it possible the market never pulls back ever again? So I have to get long. Like I must get long. If I don't get long, I'm going to miss out and I'll never make money ever. No. Even if the market keeps, going up, that's totally fine. I don't care. It don't matter to me. I'm not here to get the whole move. I'm here for my 10 points. I want my 10 points, baby. Again, what we got here. Got the little breakout. We did get a little kind of pullback there, but if you look, it's just like they play these little games, right? They're playing these little games. You get these little like kind of small retracements, but then it's like you need that bigger retracement and then the push. It's just like not enough bottom to that wave. It's just like, ugh. It's like, it's just not enough. Like I want a little bit more bottom to that wave. Just give me a little bit more structure. Little bit more structure. If this pulls back, does a micro pullback and then goes higher, that's fine. Nothing wrong with that. Hey, if I miss out on it, I miss out on it. Whatever, but I'm still like, it's not convincing me to want to get in long for that breakout. Where like this, all right, we see that we trapped, basically had like some support there. We trapped below that level. Remember, what are people doing? What do beginners do? And we see this live on YouTube all the way, people doing this. Beginners love to put their stop losses right there, right? They love to like buy here, get long. Oh, it's going up. And then where do they put their stop at? They like put their stop like right down here at the bottom. They're like, okay, this candle bounced. Okay, I'm going to get long right here. And where do I put my stop at? Oh, fuck, I'm putting my stop right there. Oh, look what happens. You get stopped out and the market goes up. Like, it's not a coincidence. The market doesn't hate you. The market's not rigged. There's not an algorithm that's trying to screw you. It's just a very simple idea. People love to put their stop losses at support and resistance. They love to. It's just like, it's a funny thing. Remember, like futures are tracking the entire market. So it's not just futures traders that create this type of action. It's the whole entire NASDAQ. People trading Apple, people trading Amazon, people trading everything. And that's obviously kind of like all those stocks combined is what gives us the NASDAQ, futures here. So it's creating these levels where the market's like starting to push back up. Okay, it's pushing. Okay, I'm going to buy. I'm going to buy in this level. It's going to go higher. I'm going to buy this pullback. I'm going to put my stop at the low of that candle. Perfect, right? It stopped me out. 5 points to the downside. And then look, whee! You think it's a coincidence? You think the market hates you? You think the market cares about your stop loss? You think the market's trying to screw you over? No, it don't. It don't care about you. The market is not a person. The market is not a being. The market is not an algorithm. The market is literally just buyers and sellers, right? And it takes these little areas of traps. It takes little areas, little liquidity runs for bigger buyers to want to come in. Because smart buyers, they're looking at this like, well, yeah, that's just not enough. Not enough for me to want to get long here, right? It's just not enough. It's not enough for me to get long. I want more because I know that Patrick told me that the market moves in waves. I need it. How would I trade this? Well, this one is a little funky. I'm going to lose it. Why does it do that every time? I don't even, where was that even at? Oh, God. I hate looking at this price action overnight because it's crap. And the market's honestly... The market has been very trappy and very, very, very bad lately in terms of overall price action. But I think at the end of the day, the theory of basically buying when a candle closes or breaks through the previous candle high is always going to be your safest bet. Always be your safest bet because if the market wants to go higher, well, the previous candle has to close above the previous candle, right? Like the candle has to close above the previous candle. Benjamin B. I just want to answer this one thing because he says that he disagrees with me. He says that the market is rigged. The market's not rigged. Smart money, people that are good traders, they know that idiots put their stop losses at the bottom of candles. They know that idiots put their stop losses at support. They know that idiots use EMAs and put their stop losses at those levels. So if I want the market to go up, You know, if I think the market's going to go higher, I'm looking for those idiots to get stopped out. It's not rigged. People don't lose money because the market's rigged. If the market was rigged, why couldn't we all just figure out how to play the rigging? You know, like if it was that simple, you know, like if you could just be like, hey, the market's rigged. Well, why not just play into that theory? Well, you can by understanding that there's no reason to get long until there's a reason to get long. There's no reason to get short until there's a reason to get short. Too many people try to trade the chap. Too many people want to trade the chop. If it wasn't rigged, you'd have at least a 50% chance. That's not, no, it isn't though. This isn't Vegas. This isn't a casino. The market isn't rigged. The market is just going to take your money because you don't know what you're doing. There's a reason, you know, that the market basically pushes up here, and then drops, pushes up, and then drops. Because people are just dum-dums and they're trying to buy these tops, and then they get stopped out. It creates more selling pressure. It moves down selling pressure, more stops getting run, and then the run up. You basically need buyers and sellers, right? You know, we need buyers and sellers. That's what you need more than anything. You know, so you can call it whatever you want. Say it's rigged, say it's a scam. But if it was as simple as just saying that the market's rigged, then why wouldn't you just figure out how to play the rigging? You know what I mean? If you know the market's rigged, why not just play the rigging? And that goes with this. This is the ultimate way to look at the market. There you go. Play the rigging. If the market's rigged, well, that's how it's rigged. That's how the market is rigged right there. It moves in waves. And when it's moving down, it's doing the same exact thing. That's my favorite, because guess what? Beginners love to enter a short at the bottom of the wave, and then they love to buy at the top of the wave. You know, like people that are beginner traders, because they don't understand the wave. You know, they don't understand the wave, so they try to what? They try to buy at the top of the wave and sell at the bottom of the wave, and they wonder. People do this all the time in the chat. They're like, oh, Patrick, I just got short, and now the market's going back up. I'm like, I wonder why. I wonder, where'd you get short at? Oh, you got short at the bottom of the wave. That's the rigging. A lot of people, if they just did the exact opposite of what they normally do trading, they'd make a lot of money. But it's hard because people don't want to just admit that the market's moving in waves. So if I want to get long, I don't want to get long at the top. If I want to get long, I want to get long once we start to curl back up. And that's what it comes down to. Curling back up. Right now, the market is just chopping around here. You can see it's like a 10-point move here. So I don't expect good price action. That's the thing too. If the market is choppy, there's not good price action. That's fine, right? It's fine to not take a trade. It's fine to walk away. It's fine to not trade every little move in the market until you see something that is popping off when you're like, holy crap, that's a good setup. Until I get confirmation that there's a good setup, that everything's lining up, that's when I want to take a trade. I don't want to take a trade just because the market's moving. You know, like right now, I'm like, I have no idea what's going to happen next. Zero idea. Like, absolutely, I couldn't even flip a coin right now and be right. I could get long and short right now and lose money both ways. You know? Like, I could literally get long and short right now and lose both ways because I have no idea what's going to happen next. Other than maybe go to the VWAP. Because look at the dollar. Oh, dollar's holding on at the bottom of the channel right now. Ooh. It might just chop around as well. But yeah, VWAP, pivot points, end all be all indicator, baby. If you don't love them, if you don't need them, well, you know what to tell you. Look at the VWAP. I like the VWAP too because the VWAP is a lot slower. It's volume weighted, right? It's not going to just move with every little move in the market. So again, it's like I personally believe that every like really good momentum style setup that happens in the market basically starts off the VWAP. And then at a certain point, we get back to the VWAP. This is like Tuesday night, 3 o'clock. We basically consolidated here at the VWAP for like an hour, and then we made that move up. And then guess what? We kind of consolidated and we made the move back to the VWAP. You know, I'm not going to tell you that you should trade the VWAP religiously, but again, like this is on Monday. Look at Monday's price action off the VWAP there. Who would have thought? It's like every like good move basically starts at the VWAP. So VWAP, we're consolidating volume weighted average price. We start to move. And then there we go. VWAP, pivot points. Love them, hate them. It is what it is. If you guys haven't hit that like button, subscribe button, you know what to do. Blow it up. That's it. My little hour rant. We kind of got off topic a little bit, but we tried to keep it alive here. We tried. Let's do some Q&A now. Q&A. All right. Volume profile. I don't give a fuck about volume profile. Does VWAP stay the same on every time frame? Yes. I'm gonna try to go through all these questions. Patrick, can you tell us about your stop loss location in the chat? Stop loss location in the chat. I don't know what that means. Do you enter most trades with a market order? Or do you exit with limit or market orders? I noticed on the stream that you execute very fast. Normally I enter with market orders. You know, I'm trading on funded account with Apex. It's not live funded. It's a PA account. So like I'm going to get pretty much like instant fills. So I don't really need to worry about using limit orders. You know, with my style of trading, most of my trades last less than a minute. You know, when you're trading momentum, you're getting in, you're getting out. I don't want to miss out on the momentum. Would it save me sometimes? Maybe. I mean, you definitely want to be careful. You don't want to just like press buy just with no actual like idea what you're doing. But, you know, you can definitely be aware of it.